Welcome to the NZ Everyday Investor. I'm Darcy, and I'm sitting with
David Cunningham.
David Cunningham. Now, David, tell us who you are. How do you fit into this wonderful world of building wealth?
Sure. I'm the CEO of the Cooperative Bank, which is one of New Zealand's smaller banks, but very unique in that we're owned by our customers. Cool. So ultimately, that means we're sort of creating wealth for our customers, both as customers of the bank, doing what's right by them, but also as part owners of the bank. So
That's
pretty
awesome.
Unique and special sort of place.
Yeah.
So
tell me about this tendency, I guess, within, Silicon Valley is probably a good example of this, but the tendency within traditional company structures to start off potentially with this idealistic, don't be evil mantra, and then you slowly slip into this evil capitalism where the responsibility for the decisions and the benefit of this venture, those things get separated. How does the cooperative structure kind of keep you aligned to that?
Yeah, well, if you sort of think about some of those for-profit but purpose-driven companies, some examples would be Tom Shoes or Lemonade, the big digital insurer and so on. They are, I think they're called B Corps, which is public benefit companies, but ultimately they're for a profit. But as part of that, they're doing good. So like Tom Shoes, you buy a pair of their shoes, they'll donate another pair to a South American sort of kid or something.
Yeah.
In New Zealand, we've got Eat My Lunch. Buy a meal.
That's
kid
right.
Gets lunch.
Kiwi Harvest is probably another
thing.
example.
Yeah. So there are quite a lot of examples and so on. And so I suppose we're sort of in that space, sort of, because ultimately we exist for our customers' benefit.
But the structure is kind of important, though, right?
Yeah,
because you need to have a reinforcing structure to keep you going down that mission, don't you?
So I suppose the cooperative structure makes it even more powerful than a for-profit company that also sort of has doing good at the core of what it does. So
we see this as a growing trend with investors. They're looking and evaluating companies through a slightly different lens now, using environmental, social, and good governance principles. But that goes very, very deep. But then when you look at that and then you look at the structure with how they're currently owned and operated, the structure kind of forces them away from the ESG principles sometimes. It's like conflict, right?
Yeah, there is a natural tension or conflict, and that's not necessarily a bad thing because
keeps it accountable.
It keeps you accountable and so on. I guess we've got that extra layer of we can do stuff for good, but actually that's why we exist in terms of we're owned by 160,000 people, not sort of one shareholder demanding the next big dividend or whatever it might be.
Yeah.
So it sort of changes the flavour. But I keep coming back to we've still got to be a really, really good bank. In fact, we've got to be a better bank than any other bank because the big guys can be probably what I might call lazy because, they've got so much scale, they've got great cost advantages and so on. So we have to do almost everything the big banks do, but with a 50th of the revenue stream to pay for it.
That's right. This kind of plays into the fairness belief that if you're operating in a domain and you're making a profit within a community, i.e. financial services, then there should be some benefit that's shared within that community. So tell us how it works. I'm a member of Cooperative Bank. I'm not an account holder at the moment, but if I was, I own a share. How does that work?
Yep. So each year our board declares rebate, and I think we're into about our 6th or 7th year of that just this year. And so what we basically do is give back a share of our profits. So the way we sort of describe it is as a customer, you get a share of our profits, which is sort of pretty unique in banking.
That's right.
Now, a profit isn't massive, so the number isn't huge.
Yeah,
but
you're not going to retire off this and subsidize your income, are you?
So we describe our profit before tax and rebates, which is about $16 million last year.
Yes.
And then the rebate was $2 million, so it's about 12% of our profit, and that's divvied up amongst our customers based on the amount of business they have with us.
Okay.
So that's specifically something the Cooperative Act sort of says, Cooperatives Act says is your rebate has to be aligned with the business that a customer does with you. So the rebate was shared this year with about 110,000 of those 160,000 customers.
Yes.
On the basis of a formula that we use based on their business with us, the value they bring to the cooperative.
I was going to ask about that because obviously some customers would be generating more profit with the activity they run through Cooperative Bank versus just a simple one basic account holder, right? So there is some sort of formula around that.
Yeah, look, the lowest rebate for those that get a rebate is $10. So we've sort of put a threshold on it, and really, that means you'll have a few $100s in a transaction account and be using it as probably all it takes to qualify. So we like to sort of spread quite wide rather than quite quite narrow sort of thing. So,
Right.
the average rebate, I think, worked out just under $20.
Right.
Lots of customers got 10, pretty small relationship. 18 was the average. And then, the biggest rebate was about $500, and that was a customer with a lot of money deposited with us.
Okay.
So, not that many are getting more than $50. But the insight really is that it's a tangible proof of who we are and what makes us different. And it's sort of interesting to talk to customers, and it's the thought that counts more so than the $18 or $42 they got.
Yes.
It's the thought that counts, the fact that their bank has given them back a share of the profits, and those profits were generated, hopefully, in their view, in a fair way as well. They weren't ripped off and
Yes.
gamed to create those profits, which
That's
I
right.
think is actually one of the biggest issues for the banking industry. We game customers, or the industry games customers to maximise their profits.
So flipping over a little bit to the future, because we've recently had a few podcasts where we've covered the future of the financial services industry from a blockchain tech perspective,
Yeah.
and just trying to reach into the future a little bit and get little glimmers of what it could be. How does this work with Cooperative Bank? I know that that's obviously one of the core beliefs.
Yeah.
So how is that being manifested? How are you guys actually starting to work in that space?
So when we think about the future, we're saying we've got to be future focused, we've got to be sustainable. So it's interesting when you think about sustainability, and number one sustainability sort of opportunity is to exist.
Yeah.
And there's a whole lot of other stuff that you can do, but the most important thing is to continue to be a cooperative, offering that solution for New Zealanders as an alternative to mainstream.
Yeah.
Free
true.
stream. Yeah, so
Okay.
I can look at a report that shows me all the customers that joined yesterday and their geolocation, because obviously from a mobile phone you can
Yes.
see where people were, and it was like we were looking at this customer, I was sort of drilling in and looking at a customer that had seemed to be near Queenstown, but they weren't in Queenstown. So we sort of drilled in and expanded the map. Turned out they were on the remarkable ski field.
Wow.
So then I went
No
to
way.
the selfie photo that they'd took, and there was the snow in the background. So, hey, you can join a
pretty
bank
cool.
sitting in a cafe at a ski field. Now, I
That's
don't know
pretty
what,
cool.
we need to ring that customer and understand, what was it that caused them to join.
Well, maybe that customer is listening to us right now.
I
Who
suspect.
knows?
I suspect
Yeah,
it was. Now that's sort of interesting. That so the language we use is we're building a digital or virtual business, but with just the right amount of human touch, and that's I guess a key potential differentiator. Yes, most people want to do most things digitally, and even some very complex things, but actually that human touch matters. And when we use the language just the right amount, it really reflects for each customer, and at different times the right amount of human touch is different. And that's why sort of branches still matter, and humans in the process still matter, because some customers don't want any human touch. We've come across customers in research that say, I don't want to deal with anyone. It's like, but most people actually value that human interaction and so on. So that's why branches remain important, but for a somewhat different purpose than in the past. It's not about transactional stuff. It's more about the real value add stuff where we get to know the person. We understand the full customer needs set and so on. So especially for some products like insurance, life insurance for me is the one that is really hard to sell online, because it's sort of a sold product, not a bought product. Very few people turn up and say, I want to buy life insurance.
That's right.
The approach we have for that, because I think as a bank we've got a duty of care to have conversations with customers, and it's sort of like talk to them about their lifestyle. You got two little kids, so what would happen if you weren't here? Who would look after them? What financial resources would they have? And that leads to the realization there's a need for life insurance, and then we might provide the solution, or we ensure that they've got a solution. So
I guess in digital, it's so much easier to serve the customer's wants rather than their needs, right?
Yeah.
And to actually get to a place where you're genuinely offering value rather than just conducting a transaction.
Yeah.
There needs to be some sort of human interaction.
Yeah.
Maybe that could change in the future, but
Yeah.
I get it, and I know very much with insurance, it's sold, it's never bought.
Yeah.
And
Yeah.
so that's probably a good segue to talk about what's been happening with the banks over in Australia, and is that going to happen over here? We've covered that a little bit on the show previously, but how does the Cooperative Bank feel about what's going on in this space? Well, there's a great cleansing going on.
Yeah. Well, look, what I say about the Royal Commission into Financial Services in Australia, it was an inquiry into misconduct. Guess what they found? Misconduct. If it had been an inquiry into great customer experiences or good customer experiences, guess what it would have found?
So we always find what we're looking for, is what you're saying.
Great customer experiences. And I'd sort of say, for the 100,000 odd people working in the banking industry in Australia, almost all the time they're delivering great experiences to, or good experiences to customers and so on, and the ratio of probably 1,000,000 to 1 in terms of good versus bad, I reckon. But hey, it was an inquiry into misconduct. It found evidence of misconduct. A lot of it I sort of observed was related to when you force something like, the superannuation and the life insurance related to it and so on. A lot of the misconduct was in that space where I'd say there was a bit of a gravy train and it was being milked by providers, not just banks but other providers, and there was other sort of stuff going on. So, it found, I guess, an overly profit-driven motive without a focus on the customer to the extent needed. And, that's what comes from, the next quarterly earnings report sort of thing.
A lot of pressure from the
and
top
where
down.
you control the price and the customer doesn't have much say. And when it's sort of follow the leader in terms of when one bank does it, every bank does it sort of thing.
And that's the thing that I think we often, as investors, forget. Like, I'm a shareholder of Commonwealth Bank in Australia, right? And I would love to think that my dividend is going to be good and the share price is going to keep on coming. But that has a consequence.
Yeah.
There's pressure that delivers, and that can flow through to misconduct because they're trying to achieve that. For me, the shareholder. So it's actually our problem. It's not like their problem, right? It's who we are.
That's sort of true. So, bring that to New Zealand. The FMA and Financial Markets Authority and Reserve Bank of New Zealand said, well, if it's happening in Australia, and most of New Zealand banks are owned out of Australia, is it happening? Surely it's happening in New Zealand too. So that was the inquiry that went on in New Zealand. So, they asked for letters from all the banks in New Zealand outlining what they did to ensure conduct and culture was good. They visited us and interviewed people and so on, and then sent us a letter saying, hey, here are the things we think you need to work on, or we had our own action plans and so on. And look, if you stand back and say, well, what did they find? The answer was they found no evidence of any widespread misconduct or even really any material misconduct. But they did really come up with two things. One was that as an industry we should be focused on delivering good customer outcomes. For us, we focus on great, but hey, good's okay.
Yeah.
And the other thing was to ask the question of boards and executive teams, and how do you know that you're doing that? So deliver good outcomes, but how do you know? What are the measurement frameworks you've got in place? So, how do you monitor complaints to understand if things aren't perhaps all isn't well, and so on? What reporting do you provide to get feedback from the customers that the outcomes are good in their eyes and so on? What follow-up do you do with customers to ensure that the product you sold them 3 years ago is still the right product for them today? So there was some good outcomes in that in that sense. And I suppose when you look at the Royal Commission report from Australia and what Rob Everett and Adrian Orr have sort of said about New Zealand, it starts with culture.
That's right.
So the culture that comes from the board through the executive team, the expectations that are set. And I think, arguably in ANZ's case in New Zealand, we've seen perhaps where the culture wasn't so flash, and that permeates sort of through the organisation and so on. And so I actually think there's a bigger issue that they've been missing, and that is that the banking industry, I think, has designed products to game the customer.
Okay, well that's interesting. Tell me more about that.
So, a couple of examples. Credit cards. So a few years ago, credit card interest rates were 15, 16%, 17%, and whether you got money off your card for cash advance or paid for something, you paid the same interest rate. And then in the thirst for more profit, suddenly, banks started to introduce a higher interest rate for cash advances, and interest rates went up. So we ended up with a lot of credit cards with a 19.95% interest rate and a 22.95% cash advance rate. And as interest rates have fallen, those haven't changed. So when Cooperative Bank launched our fair rate credit card, as we call it, we had a 12.95% rate on both purchases and cash advances, because we can't see a reason for there to be a different rate and to sort of game the customer. Now, what happens in the industry is everyone's got a 0% balance transfer offer or no fees for a year.
That's right.
So they muddy the waters. So there's always sort of a better offer, and if you're always playing the game of finding the best offer, you win. But others are losing, and I think 2/3 of balances, credit card balances, aren't paid off each month. So about 70 or 80% of people pay off their balance, but 2/3 of balances aren't paid off. And those customers are paying an average of about 17% for their credit card debt.
Okay. Yeah.
Now, when interest rates are sort of 2 or 3 or 4, is that fair?
I see this all the time in terms of people who are trying to obtain finance, potentially to buy their first home, for example, and they're paying $500, $750 a month in credit card payments, which equates to, $200,000 or $300,000 of borrowing eligibility that they've just missed out on. So this is not just the fact that people are paying a lot in credit card interest. It's the fact that they're now excluded from buying a home potentially.
Here's one example. Other examples are probably things like savings accounts where, if you do something, you get a good rate. If you don't do something, you don't. Like, the base rate on bonus savings accounts type is, 0.1%. You can earn 1.5% or 2%, which sounds extraordinarily low, doesn't it?
That's right. But compared to 0.1, it's
but
pretty
most
good.
people don't earn that bonus. Most people and a good chunk of balances don't earn that bonus either. So
that's what you mean when you say that they're kind of gaming the system.
Yeah.
They're just making it harder, or they're muddying the waters so that the same amount of profit can be extracted, but not as so obvious, not in plain sight.
So I think there's a simplification of products that's actually already starting to take place. So, like, for example, we're merging all our savings accounts into one, which simply pays a fair rate of interest on the daily balance. No catches, no you got to do this or that, not
a lot of complicated options.
Fees if you happen to use it for your FPOS sometimes or whatever it is.
Yeah.
So we're in the process of simplifying. I think we're taking a 10 transaction and savings accounts down to 2 or
Wow.
3
Okay.
3 actually, because we've got a kids account as well, which is pretty special.
Going back to the technology bit, in this move, potentially slow move towards open banking and doing right by our customer, how ready is the Cooperative Bank in that space?
Yeah, well, look, the what's called the rails for open banking have just been laid in New Zealand. So Payments in New Zealand's the industry body, and they've created, I guess, the API structures, application programming interface structures, to enable open banking in New Zealand. And now there are sort of 2 key pieces to open banking. One is the payment side, which says rather than the traditional ways of paying and Visa and MasterCard and so on, we've now got the structure where new entrants can come in with different payment mechanisms. So it opens up that sort of payments world. And my gut feel is we'll see 2 or 3 players really get some traction in that space. So you sort of think about a PayPal, for example. It's a bit like that, but a New Zealand sort of version. So there's already an example of that in New Zealand called Online FPOS, which was delivered 2 or 3 years ago, and I think 3 of the banks, including Co-op banks, in on that. So it lets that be a payment option for customers. So that payment side to, I guess, let alternative forms of payments sort of happen. And, things like blockchain could ultimately be part of that. I don't know if there's really a use case for it, but that's one part of open banking, which I'd call open payments.
Okay.
The other part is what I'd call open data. So it's where I can share my data with someone else that I give permission to, and they can use that data to add value for me, the customer.
Yes.
And really, I break that into 2 things again. One is permanent access to my data. So an example of that is I get access to the data, and this might often be a fintech sort of startup that get access to the data, then plays that data back in terms of, say, where you're spending your money or whatever. And a bank might integrate that software into how they show their customers what's happening.
Like Xero.
It's the consumer version of sort of what Xero is doing.
Yeah.
So that's one piece, is the permanent access to data, which is useful, but I just stand back and go, most people don't give a stuff. It's like, have I got money in my account at the end of the week or day, or now I'm in the supermarket to pay for what I want to pay? I reckon 10% of people really care much about, truly understanding what their money is.
Well, at the moment, right? I guess what I'm fishing for is, it's hard to express this, right? But the change is changing, right? The rate of change will possibly overtake even our greatest imaginations, right? In this space. And I'm just wondering if in the future will there be banks in the same way that we imagine banks today, or will it fundamentally be broken down and retransformed and reshaped? Sorry.
Yeah. I mean, that's where data has a part to play. But I sort of come back to, most people don't care much.
Not yet, though.
And I think the more powerful part is one-time use of open data, because if a customer wants to join our bank, join the Cooperative Bank, then we need some information, right? And especially if they want to get a loan or something, need even more information, because there's responsible lending codes under the Credit Contracts and Consumer Finance Act and so on. So we've got an obligation as a bank to get some data about the customer. Now, as a customer, the last thing you want to do is tell someone something they already know or could get without imposing a burden on me. And that's where open banking, open data comes in, because if a customer applies, it's a customer of, I don't know, Westpac or something, that is applying for a personal loan with us, we have an obligation to look at a bit of their account history with their existing bank. At the moment, we get them to upload bank statements and we analyse those and go, yep, good for a loan, or no, not good for a loan, and we do credit checks too and so on. But what open data does is the customer can permission us to get that data, and we can run it through a program and say, yes, instantly, and remove all that friction. So what I sort of see open banking does is remove friction, which makes it easier to change banks and easier to buy solutions without having to go through, a whole lot of seemingly useless process. And I think that's what it unlocks. It removes friction, and therefore it opens up banking to more competition and makes it easier for banks like us to grow, because our biggest challenge is we need a lot more customers, and as a nation, and I think this is true the world over, there's a high level of inertia.
Got to go to the branch with 2 forms of ID, and I've got to provide bank statements, and it's harder and harder to get the bank statements on my bank account. But like what you're saying is that if you remove that friction, it keeps the incumbents accountable, and it gives a greater opportunity for more efficient players to serve customers better. Before we finish up, David, do you want to tell me a little bit about the whole capital reserve requirements piece and where the Reserve Bank is at from your perspective, and how you think you guys are poised for that?
Yes, banks have to hold a proportion of the lending that they do as a sort of a reserve, I suppose you'd say. So we've got to put up a bit of our own money when we make a loan. So let's say we make a sort of a home loan of $500,000, we might have to put up, say, $20,000 of our own money and then borrow the rest and so on. So that's called capital. And those capital rules are determined by the Reserve Bank. So they just define, how each asset is weighted, risk weighted. So if I make a home loan, it's risk weighted 35%. So although I've made a $100,000 home loan, only $35,000 of that gets counted. So that's the first bit, what your assets are that they're going to calculate capital on. And the second bit, how much capital you have. So what percentage of that risk-weighted piece needs to be put up by the bank versus put up by depositors. So what has been proposed by the Reserve Bank is to set much higher levels of capital. So they're proposing a level of 17% for the smaller banks and 18% for the systemically important banks in New Zealand.
Yes.
And most of that will be what's called Tier 1 capital, so capital that's put up by the owners.
Yes.
So those levels are much higher than most banks are at the moment, especially the major Australian banks. So for Co-op, we're pretty much at those levels already.
Is that right?
We've sort of run the business relatively conservatively, been smaller, and so we've got those big buffers. So we're not far off those levels now, whereas for the big banks, it's another $20 billion of capital that they'll have to hold. Right. So I suppose you'd say what it's doing is de-risking the industry. Yes. In terms of if, the Reserve Bank talks about a 1 in 200 year event. So it pretty much says, banks aren't going to get into strife in New Zealand because they've got such a big relative buffer, capital-wise.
And that puts Cooperative Bank effectively on a more even
playing field because, basically all banks end up with relatively similar sort of capital
Because you guys are kind of already there, almost.
Yeah.
And this would mean that the Aussie banks would have to stump up with a lot more capital, which just means that now they might have to pull in some of the reins a little bit around pricing and offers and all that sort of stuff. And
Look, so what I think we'll see is that I am pretty sure the Reserve Bank will largely affirm what they said what they were going to do. So
Yeah.
The big banks have pushed back pretty hard and said it will hurt economic growth and so on. Well, I'd say a tweet from Trump can do more to our economic growth, taking a long-term perspective than what the Reserve Bank's doing. So,
and the bank, are they really going to leave the country?
Yes, arguably, it's not. But we've seen a loosening in capital standards over the last 20 years, which are now being sort of tightened and so on. So we've had the benefit and so on. But I don't disagree with the cut and thrust of where the Reserve Bank's going. At the margins, there are some things, in terms of different capital instruments that for smaller banks are important.
Yes.
So I think there'll be a few tweaks, but I think that absolute level of capital will be pretty high.
Yes.
And, I don't feel that's inappropriate. You do these things in good times. And I think in New Zealand, we've got the unique position of a very profitable industry that can generate profits to build up those capital reserves. So, I'm one of probably the low nerve voices that sort of says, I think they're going down the right route.
Okay, that's good.
And, I think it's ultimately not bad for New Zealand and arguably in the long term good. It's easy at times like this when times are good to sort of underemphasise just how difficult things can be. GFC being a great example of that.
Yeah, it's really hard to imagine what it's like when you're healthy, what it would be like if you were sick.
Yeah.
And the opposite is true, right? So it's good to prepare now.
Yeah.
So before, just one other one, before we finish up, is there anything else really cool and unique about Cooperative Bank that you want to share with us?
Look, one of the things about changing banks is there's sort of got to be a trigger. And so what we find is often it's a try before you buy type thing. And one thing I'd sort of say for your listeners is, you've probably all got kids or grandkids or something. One thing really special about the Cooperative Bank is that we've got a kids account that pays an extraordinary high interest rate of 4%. So when you think the OCR is 1% and, savings accounts are paying, 1% or less, or 1.5% probably at the best, and term deposits are sort of under 3%. So we're paying 4% for the first $4,000 in a kids account.
Wow.
And really that's about the future, part of our beliefs that I've talked about earlier on and so on. So, and what we've found is that's often quite a nice entree for parents, because you can't open kids accounts online. So go into the branch and then our staff wow the customer, and they come out going, well, I went in for an account for my kids so as they can learn to save and get good interest rate and so on, and learn that habit. But boy, that team there really wowed me, and so that's sort of an entree into a potentially wider relationship. So it's something pretty unique, or very unique, or totally unique. Actually.
So we're talking about 4% on balances under $4,000. That's,
and then it reverts to our best savings account interest rate.
Wow,
beyond that.
That's cool. No, thank you very much, David. I've learned a lot. I know, previous to this conversation with you, I kind of thought hippies and communes. Cooperatives, but no, that's not really a full picture of it. This is probably a little bit more about resonating with true Kiwi values, being fair, equitable, sharing, helping each other out.
It's, I mean, it's sort of a, telling our story with pretty small budgets is sort of challenging. But we're really clear. We do a lot of digital sort of work, because I guess we've found that TV is expensive, and you're just not so targeted. But we sponsored the project, which gives us a bit more exposure and so on. But that's the beauty of smallness, is you're forced to, the theory of constraints drive innovation.
Totally.
So
absolutely,
you
guys are probably in a really good position, especially with the technological changes that are happening and the customer centricity movement that's happening. You are probably at the forefront, arguably, in terms of being able to adapt to that, right? That's cool. Exciting times.
Cool.
Thanks for coming on the show.
Yeah, thanks for having me.
All right.
That's awesome.
Cheers.